Hello, everyone, and welcome to another edition of Honeycomb Digital Investments, the Regulatory Buzz. My name is Baxter Hines. I am the Chief Investment Officer of Honeycomb Digital, and today is July 12th, 2022. And again, I am honored to be here with Professor Carol Goforth of the University of Arkansas. Welcome, Carol.
Thank you for letting me participate with you. It's always fun.
Absolutely. Well, I tell you, it's I guess you could say it's fun, but it's also interesting. No one could argue with that. What's going on in the crypto markets nowadays? A lot of volatility. It has been sort of the first half from hell, if you will, for a lot of these crypto prices. And what that is bringing about is a whole new slew of litigative action that's coming towards various players, whether they be projects in the crypto space, exchanges, or other pieces of infrastructure that are coming not only from regulatory bodies, but what we're going to discuss today is coming from the private side. Class action lawsuits, those sorts of activities that seem to be sort of bubbling up and coming to a head in the courts. We wanted to talk about that today because this is something that hasn't really been talked about a lot in the media. It's really we've seen an environment where there's talk of the SEC or the CFTC or some other sort of ABC agency within the executive branch of the federal government, or maybe a state government like the Texas State Securities Board, coming after different projects that may have allegedly violated securities laws. But now we're starting to see this whole other crop of lawsuits come about, and we wanted to talk about that today. So maybe if you could, just at a high level, what do you think the implications are for this?
Yeah, when you start looking at what is happening, sources suggest that there are about 500 class actions that have now been filed against various actors in the crypto space. And instead of being a regulator enforcing regulations, this is private citizen initiated actions seeking to enforce the rules that regulators have put in place. So instead of the SEC going after a crypto exchange saying, hey, you failed to register with us, this is a private action brought on behalf of people who traded on an exchange saying, you didn't properly register. If you had registered, you would have given us more information. Failure to register creates liability, not only to me as the named plaintiff, but all other persons who are similarly situated. So, for example, you see in a recent action filed, there have been previous actions, but a recent class action filed against Binance, 2,000 different potential claimants are part of that class, meaning that if there is a determination that the assets that Binance was allowing to be traded on its platform are determined to be securities, and Binance did in fact not register as a securities exchange and did not comply with the applicable exemptions from registration, then it could be liable not just to one regulator, but to all 2,000 members of the class. We're also seeing class action against Coinbase, the largest US exchange, and also some very influential, well-known developers and issuers. Solana was recently sued in a class action alleging that they had failed to register their token. And so again, it is a private enforcement of an SEC rule saying it is illegal to issue or sell a security without registering it. And if you do, one of the remedies that is built into the Securities Act is that there is an absolute right of rescission. That is, you get your money back. So everybody who bought and sold within the applicable time period, because there are limits on how long you can wait before you bring the action, but everybody who bought within this time period has an absolute right to all of their money back, even if the price dropped for other reasons, such as the cryptopolis that you're talking about, the crypto winter, where the price declines are clearly not because Solana was misleading anybody. It's a strict liability, no fault. You didn't register, give anybody who wants their money back their money back. And that can have profound implications for an issuer. I mean, it can drive them into bankruptcy. puts all the risk on them. So that's the big issue.
Well, that definitely puts a lot of uncertainty in the marketplace and definitely would put a financial burden on, again, a lot of the critical infrastructure and these projects. What it seems like to me will happen, and this is sort of a law of unintended consequences of all of this litigation and lack of legislation, is that it's going to send projects overseas. And to me, that's very contradictory to what we're hearing politicians in Washington wanting to see happen. And just to give some color on that, the last executive order that President Biden put out explicitly stated that the United States wants to stay at the forefront of the technology scene, and they see blockchain and cryptocurrency as a critical part of that. And so this lack of this gridlock, whatever you want to call it, where we can't get the agencies or the legislators, the members of Congress to come up with the rules, is really going to be a hamper to the U.S.'s position in this new technological innovation.
I think you're absolutely right. And I think one aspect of that phenomenon is that if and when these businesses leave, they are likely to leave for places that are not cooperating with the US. And those also tend to be places that do not have particularly refined or high level regulatory oversight in place. So not only is it counterproductive to President Biden's March executive order, it is counterproductive to the ostensible goal of the SEC that we are supposed to be promoting financial stability and we are supposed to be promoting capital development and formation. So I really worry about that impact, which would have the consequence of decreasing the influence of the US regulatory regime and structures, make it likely that if we did eventually adopt reasonable regulations that had a path to compliance that wasn't so burdensome that issuers really couldn't do it feasibly, that it'll be too late. The businesses will be elsewhere. They'll be operating elsewhere. And in the meantime, what does that mean for the US? It means that entrepreneurs either leave or they can't raise money from the US citizens, which is a huge detriment to them. What does it mean for US investors? Well, yes, they are protected, but it's like being protected in a giant plastic bubble where you're protected because we're not going to give you those sharp scissors. Yes, that means you can't cut out pretty things. You can't make, you're denied the opportunity to choose for yourself what risk is acceptable, what rate of return is possible. And we're being denied it when citizens in other countries are not. And I think that's not an intended consequence. I think it's a perverse consequence.
Right. No one will sell to a U.S. investor. Bottom line, they just won't want to deal with the potential legal ramifications. And that does, like you said, change the dynamics of where the U.S. stands internationally. What I would imagine happens from this is you will see more pressure put on the regulators to make something happen. They're going to have to make changes because crypto is so widely used by a large portion of our society in terms of just investment. I think the stat that I heard earlier this year was more people have more than $1,000 in crypto than they do in a savings account. And so politicians can't ignore this type of person. It's just too many of them. You've now got participation by a lot of these big companies in the community. To name some examples, like FTX has the stadium in Miami where the Heat plays basketball. And then in San Francisco, you've got the Coinbase arena where the Golden State Warriors play. And then there's just all of these other entrepreneurs that are in, places like California or Austin or Florida, wherever they may be. And the politicians and their donors and their lobbyists are going to probably really start taking this to another level as a result of some of this private action. It seems like the regulators have kind of stayed at bay for strategic reasons and for bigger picture reasons, I think. But this private actions could be the catalyst that causes some more change.
I agree, except that people get blinders on. And I actually think that is part of what we've seen with regulators. They have staked out a position and they don't want to back down from it. So Chair Gensler of the SEC has said, crypto is still the Wild West, notwithstanding the incredible volume of enforcement and private actions that are out there. Crypto is rife with fraud, notwithstanding the analytics information from firms like CipherTrace that suggests that it's down remarkably as a percentage of the total crypto market transactions. You see even Congress people like Elizabeth Warren in her communications with regulators express this repeated concern that this is an asset class that can't be trusted. It's that mindset that says crypto is for criminals. I think what is really fortunate is that we have a growing number of particularly legislators who do not share that view, who are more open-minded about the reality that there are a number of good faith entrepreneurs, people who welcome reasonable regulation, would like to be able to operate in a compliant manner, and as a result, we are seeing new potential legislation like the Lummis-Gillibrand bipartisan act that is currently being discussed. I'm not sure that that's the act that will be passed, but it is a comprehensive, 69-page bill that covers all manner of different issues relating to crypto. And I do think we are going to start to see movement. And I think you're right. We have to start seeing movement.
I think so too. You're getting bipartisan demands to do something on the let's do something, to foster the industry, and the let's do something to curtail it because it's criminal. But the good news, I think, is people are forced to talk about this stuff at this point. It's too late to ignore it. There is sort of the fuel underneath the fire is just too intense to ignore for forever.
I agree, and I'm hopeful.
I am too. I think so. I mean, I think you continue to hear people like whether it's Pat Toomey or Cynthia Lummis, powerful senators making statements that they want something done, and I think the executive order was a step in the right direction. Inevitably, it takes time for human beings to work stuff like this out. So I think that the ship is pointed in the right direction. We just have to hope for the best, and that's why we'll continue to do episodes like this at a later date.
Sounds good to me.
Thanks again for being here, Carol.
As I've said at the start, it is always my pleasure.
Us too. We enjoy you being here.